the whole foundation of what crypto is, it's supposed to be a distributed ledger that is across the system. I actually believe this technology is going to be very important. Look at it. We have been part of the huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we can have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem. You don't need trust banks.
Hello everybody, welcome back to the crypto realm. Alright, so what's the trend for 2023? Apparently, it's going to be the tokenization of everything. Blackrock joins in a growing number of firms backing the tokenization of securities despite the CEO's wider crypto cynicism. And even Coinbase here. Real-world assets poised to be DeFi growth engine. Wow. So the push to marry DeFi with real-world assets just got a big boost. Coinbase, the #1 US crypto exchange with 7.5 billion market cap, predicts that institutional entities will seek to use permissioned DeFi platforms and drive innovations in the tokenization of real-world assets. The forecast picks up on the push by DeFi stalwarts maker DAO and AAVE to embrace the burgeoning market for putting bonds, real estate, and other traditional assets on chain. In its 2023 Crypto Market Outlook report released Tuesday, Coinbase said it expects to see more dApps adapt their platforms for permissioned DeFi activity as regulated institutional entities seek more involvement in this sector. This could have compelling use cases for settlement and cross-border payments alongside innovations in the tokenization of real-world assets, the company said. Permission DeFi would likely target different use cases and solve for different problems like under-collateralized credit compared to permissionless DeFi. Coinbase highlighted significant RWA projects that are already underway, including a partnership between MakerDAO and Société Générale, a major French bank that is issuing AAA-rated French home loans as collateral to borrow up to 30 million DAI. It also highlighted the project in which JP Morgan Chase, DBS Bank, and SBI Digital Asset Holdings traded tokenized currencies and sovereign bonds on the Polygon network last month. Oh yeah. Coinbase tips that established DeFi protocols may soon launch permission liquidity pools that are compliant with anti-money laundering or AML KYC regulations, separate from the permissionless liquidity pools used by non-institutional participants. AAVE, the leading DeFi money market by TVL, launched its permission platform ARC in January with 30 institutions initially whitelisted for the platform. It launched on Ethereum's leading Layer 2 networks Arbitrum and Optimism later that same month. Colin Cunningham, head of business development at Centrifuge, a DeFi platform for financing real-world assets, told a Defiant Coinbase is spot on in their assessment that tokenizing RWAs and other off-chain assets is the next frontier for DeFi. That's right, tokenize everything. Given market conditions, it's important to acknowledge the necessity of crypto providing a real-world value, and RWAs represent that, Cunningham said. I hope RWAs finally get their due in 2023. Crypto liquidity is starving for yield. Tim Leahy, the co-founder of Swarm, a regulated platform for accessing decentralized finance, agrees that tokenized RWAs will be a major narrative in 2023. Oh yeah, crypto is here. The digitalization of real-world assets, RWAs, will be a momentum-shifting theme for institutional crypto in the year ahead, with stablecoin technology at its heart. Leahy's told the Defiant digital assets exhibit a low correlation with other traditional financial assets, such as commodities and bonds. Regulated DeFi projects are actively pursuing the introduction of classes of tokenized collateral from TradeFi, as the lack of correlation is a feature, not a bug. Leahy suggested that RWAs can be brought on-chain using that same structure that is employed for fully fiat-backed stablecoins. Since stablecoins are already a category of tokenized RWAs with 100 billion market cap, it is only natural to extend the same tokenized structure to public stocks, bonds, ETFs, and other assets, he said. Yeah, why not? Making a surprising connection, Coinbase also expects that RWAs will be a proving ground for non-fungible tokens. The company said that NFTs are increasingly being used to certify and authenticate real-world assets on-chain, including real estate, physical goods, and financial instruments. Coinbase added that RWAs are an opportunity for non-fungible tokens to expand beyond largely speculative use cases. Themes such as digital identity, digital footprint mapping, soul-bound tokens, and the tokenization of real-world assets have the ability to strip away the speculative nature of art collectibles have the ability to strip away the speculative nature of art collectibles and emphasize the fundamental advantages of non-fungible tokens, the report said. Yeah, it can be more than just a picture, an NFT, right? Despite Coinbase's bullish outlook for RWAs, the firm warned that new forms of real-world assets will be slow to come on-chain due to regulations, while issuers are resolving the financial and legal hurdles to tokenizing other less liquid real-world assets like real estate. The market for these is still underdeveloped. The total value locked in RWAs on Ethereum is $612 million, down from an all-time high of $1.75 billion in quarter two. Holy cow. All right, so we heard it here. There's a lot of work being done for the tokenization of real-world assets. Everything is going to be on the blockchain. Blackrock, biggest company in the world, holds $10 trillion, is tokenizing. It wants everything to be tokenized because it gets solved right away. Peer-to-peer, done. All right, this is the crypto realm. Play hard, trade smart.